Yo, what's up everyone? My name is Dom and we're going to talk about unusual options activity. Alright, let's kick it off with the disclaimer. So, this video is for educational purposes only. The statements made in this programming are solely the opinion of the show and are not a specific inducement to make an investment. One must perform their own due diligence and realize all investments carry risk. There's no guarantee of profit. Alright everyone, first one I want to bring up is TMC. Now, this one had some unusual activity today, and some of these short-term options, these expire Friday here. Now, I talk about this all the time here. With some of these speculative trades here, what I want to do here is I saw some people buying these out-of-the-money calls here, so we're in the 16 strike call. Now, this is a very low probability trade, but it's costing us significantly less money than buying the at-the-money call, so we have lower risk and we have a higher risk reward. Now, this stock was up almost 30% today. This used to be a SPAC. It merged into this green metals company. To be honest, I don't really know much about this company. I just saw the activity, jumped in. This could be one that catches fire. You know, it could be a meme stock or whatever, but I'm keeping my position size as small here. I'm paying less for the out-of-the-money call here, taking on less risk, but it's a lower probability trade. I expect this to be a wild trader here, so it's either going to be up 30% or, down 20%. So I'm not, I'm fine getting the out-of-the-money call and going for that lower probability trade here. If we take a look at the chart here, this thing has only been trading for about a couple days now. Obviously, it was trading pre-SPAC merger, but TD Ameritrade, Thinkorswim does not. It takes a little bit for that data to come into here, so not really a whole lot on the chart. If you take a look at the 5-minute chart here, this thing had a huge spike up to about 15. We bought it somewhere around this pullback here, so we have pretty much even in these options out. But this is a really speculative trade here, so I make sure I size my positions accordingly, and whatever I put into these kind of trades, I'm expecting to lose, and well, not really expecting to lose, but I'd be fine to lose what I put into these trades. So next one I want to bring up is AFRM Holdings. This is a buy now, pay later company here. They reported earnings a couple days ago. The stock was up huge on earnings, 30%. Today it pulled back almost 12%. So I thought this was a good opportunity to get into some options here, especially with all this unusual options activity. Now, there's a bunch of calls trading for these calls that expire this week. I got into those. There was also some calls trading here out in November. There was some good option activity there. Pretty much all of these main months were hitting here. So good November. There was some unusual activity in some of these October 15th ones. I decided here to go with these calls that expire this week because I compared it to either getting the this week expiry or getting the November expiration. The November expiration costed me would have costed me about $3 for a $10 widespread. These options here costed me about half of that, $1.50 for a $10 widespread there. So I really like that risk reward. With vertical spreads, we try to shoot for pay no more than 30% of the width of the strikes. So $10 strike width, the 15 and the 25. That's about $10. That's a $10 wide, $10 wide vertical spread there. So we paid about $1.50 for that. So I like that risk reward there. I decided to go with the short-term options here because if this trade does not work out, we can cut our losses immediately and not have to sit here and worry about, oh shoot, okay, well I got November. If I got the November expiry, I'd be sitting here saying, oh, well, I'm just going to hang on to this trade and, see if it works. And before then, the option is completely worthless. So I've been liking these short-term options here. I guess you could say they're more risky, but I'm actually thinking they're not more risky because we're outlaying significantly less premium. And if the trade starts working against us, we can pretty much cut our losses immediately, limit our losses, and not be hanging on to that extra time, thinking that I'm just going to hang on to this because we have so much more time. If I bought those calls for November, shoot, we still have 2 more months for this trade to work. I'm not going to cut my losses, and well, the stock keeps falling, and at that point, the option's worthless, and at that point, it's too late to cut the loss. So I hope you get kind of what I'm saying there. With short-term options, you kind of take the emotion out of it, and you just cut the loss when the trade starts working against you because you have to, because the option expires. if you're buying yourself a lot of time, that is good because you're giving yourself more time for the trade to work, but you're less hesitant to cut the loss if the trade starts working against you because you have all this time for the trade to work. And that's happened to me. I hang on to it because I have so much time for the trade to work. I hang on to the option, and it just becomes worthless because I was just hanging on to the, that I had so much time for the trade to work, and in reality the trade was never going to work. So this thing has run up a lot here. This pop was on news that Amazon is going to be using their service of buy now, pay later. This pop-up was on earnings. As you can see, it hit almost $130, pulled back to about 102 today. We got in somewhere around the close, around 109. So this is, a risky trade here because the calls expire this Friday. But once, as I said, we're going to cut the loss pretty much immediately if the stock is down badly again tomorrow. Cut the loss and move on to the next trade. Not hanging on to it thinking we have all this time and, that mumbo jumbo that I just described. So, thanks to everyone who's been subscribing. I really appreciate it. Make sure to keep the subscribing up. Make sure to leave a like so I know to keep making more videos like this. As always, make sure to leave a comment down below if you got any questions. We'll see you in the next one.